Good evening. So just wanted to do a quick video as promised to show some details of a study I wrote this morning, which is this one down the bottom here, and it's to do with times of day in trading. Some of you'll know I wrote this other study a while ago, which is a kind of zigzag tool. One of the things it does, however, is build statistics of when the rotations actually occurred, and it will tell you, based on past data, when turns up or down are more likely at certain periods within the hour. So 5 minutes past the hour, 30 minutes past the hour, and so on. And they actually turned out to be very consistent and statistically significant. So if you haven't looked at that sort of information before, I would suggest you do, because it is good data and can help you with your trading, on indexes anyway. It seems consistent across commodities and things as well, I've looked at. Anyway, let's just get rid of that for a minute. Rather than just look at 5-minute periods within the hour, I decided to look at every single 5-minute period for the whole day this time. So, to explain, this bar here, for instance, the 11:25 bar, this is the 5-minute period for that time of day for the last 30 days. The green is the net gain if the bar above the open of the bar, if the bar closed up, and the red is the loss if the bar closed down, and it's the difference between the open and the close, and the line here is the balance. So we can see, for whatever reason here, the 11:25 bar for the last 30 days, statistically significant, it looks like, has closed up a lot more than it's closed down, or the net gain anyway has been much greater, almost twice the net loss. So on balance, if you simply bought the 11:25 bar for the last 30 days, you would have, and sold it at the close, you would have made money, almost 2 to 1. I'm not suggesting you do that for 1 second, so please don't. But the point of this is to illustrate there may potentially be times of day where moves occur up or down, and they may be in one direction at one time, and they may have a tendency to pull back the next. For instance, if you look at this 11:25, we obviously have some significant moves there, but then we seem to have some decent pullbacks in the 15-20 minutes afterwards. As I say though, the point of this indicator was to look and see if any times stood out over long periods of time across the indexes. I've not looked at all the data yet, but this is just to give you an idea of what I was doing, and maybe you can go and have a look at some of this stuff yourself. 850 bar, 11:25 bar, 12:05 bar, 13:45 bar, 16:20. As I say, I'm not suggesting you buy or sell based on time periods, but there does appear to be specific times which you might look at a certain trade setup. For instance, you may decide that, 11:25, you might want to look at possible longs at the moment, or shorts. The point is, the move in whatever direction the market may be going, trending perhaps longer term at the moment, is significant. So you have a pullback 5-minute before and a significant gain afterwards. As I say, you might look at this and think it's fairly random. I don't think it is, based on my experience with the 5-minute buckets, but I need to do a lot more work to know for sure, and if I get some feedback, maybe I'll share some of that work on here as well. Anyway, hope you find it interesting. Go off and look at it yourself. Let me know what you find.